Happy Women Month again, everyone. In March, as the world celebrates women, we at Melanin Means Business are celebrating the women economy. This past decade, we've heard a lot about women empowerment, but we don't talk a lot about the women economy. How much women spend, how much do they earn, and how big is the business of selling products to women. And yet, there is a lot to say. In fact, there is billions of dollars of reason to talk about the women economy. Every year, women across the world spend more than $20 trillion and earn a cumulative of $13 billion every year. So today, let's take some time to talk about the women economy, what it is, and what is the opportunity for African entrepreneurs. So first, what is the women economy? The women economy refers to all the economic activity in which women participate, not just as workers or entrepreneurs, but also as consumers, caregivers, and decision makers in the households. This includes women participation in production, like agriculture or trade, women as the primary purchasers of households, goods, and services, women as owners of micro, small, and medium enterprises, and the unpaid housework that sustains families and informal systems every day. Across Africa, the World Bank estimates that women control between 70 and 80% of all purchasing decisions in the household. They make up 40 to 60% of all labor force in some key sectors like agriculture and market trade, and they represent trillions of dollars of annual consumer spending. So imagine if women had equal access to land, ownership, bank accounts, and credit insurance, Africa productivity could increase by 50% across the next decade. So that is why closing the gender gap for African government was never about charity. It was about unlocking $2.5 trillion of GDP over the next 10 years. One institution that has recognized this opportunity is Ecobank, one of Africa's top Pan-African banks. Ecobank identified that women entrepreneurs often have strong repayment behavior, influence broad consumption patterns, and drive community economic activity at scale. So this led Ecobank to start a program called the Elevate program, a financial initiative designed specifically to serve women entrepreneurs and employees across 36 markets in Africa.
From the beginning, we were united by a belief that SMEs are the backbone of Africa's economy. Fast forward to November 2023, we renewed and significantly expanded the partnership to 200 million, now covering over 27 countries across Africa. And what's different today is the sharpened focus. 75% of this guarantee is now earmarked for gender-focused and green transactions. And we've been deliberate, we've been intentional, because we know that women entrepreneurs and sustainable businesses often struggle to access the most secure and affordable kind of financing that they need to grow.
For decades, banks have actually struggled to lend to women entrepreneurs because of one fundamental issue: access to collateral. In Africa, most women do not own land titles or assets that traditional lenders need to guarantee the loans in case of default. So to address this issue, institutions like the African Guarantee Fund launched the AFARA program with the African Development Bank. Their goal together is to provide guarantees to banks to unlock more than $4 billion of credit for women businesses in Africa.
African Guarantee Fund is looking to solve the SME financing gap across Africa, which is estimated at about $330 billion.
AGF is currently in partnership with the AFDB AFAWA program to unlock financing to women SMEs in Africa. And in doing so, we have offered financial institutions in Africa two solutions. One is the guarantee product, which is a risk-sharing mechanism. And accompanying the guarantee program is technical assistance or capacity development.
To make access to finance successful, solving the collateral gap was necessary, but not enough. A lot of women entrepreneurs still face a big barrier: financial literacy. Most of them lack structured financial records, credit histories with banks, and compliance documents that all financial institutions require. That is why Ecobank partnered with Melanin Capital Neobank to leverage their fintech expertise, their credit readiness training, and provide the first access to finance through the green financing offers for those businesses so that we can build a track record for women entrepreneurs.
Bringing in Melanin Capital into this partnership was also another strategic move. Their expertise in investing and in capacity building complements the risk-sharing strength of Africa Guarantee Fund and our Pan-African banking infrastructure. By now, I know everybody knows that Ecobank is present in 35 markets across Africa. So this is really a powerful partnership. And so together we are tackling the 49 billion gender financing gap head on.
This partnership demonstrates a key lesson. Our financial system requires multiple collaborations to become inclusive with traditional banks, guarantee institutions, government organizations, and digital platforms like Melanin Capital. With all these collaborations, we can make sure that we can bridge the gaps that still exclude more than 50 million entrepreneurs every year. Ecobank saw the benefits of this collaboration and how inclusivity could even go further by financing some of Melanin Capital's businesses like Agribora. Agribora is a USSD and digital app that enables grain commodity trading for Kenyan farmers. It operates in markets that are dominated by staple grains like maize, beans, sorghum, which represent a substantial portion of the country's agricultural trade and even 3% of Kenya's GDP. On Agribora's platform, roughly 45% of farmers supplying all the grains are women. 16% of all active traders and buyers are also women. This reflects a broader pattern in Kenya's grain economy. Women are not just participants, they are key economic agents throughout the value chain.
So now, women farmers can come and have a legal document of ownership, just like a title did, but now it is a warehouse receipt of grain, helping them to unlock access to finance. And then every day we are able to send out messages to the farmers on USSD, on WhatsApp. They can check the current price of the grain and then immediately decide if they want to sell. So we are looking at not only the post-harvest loss reduction or the financial inclusion that women farmers, youth farmers can benefit from. We're looking also at the job opportunities that are now being created, because bringing crops into structured grain corridors means that you do have value addition activities, storage, drying, threshing. These are opportunities for our young youth that are looking for jobs and who have been running away from agriculture because there has been no opportunity to actually see how you can make money in it. So I think it is an opportunity for us to bring back dignified jobs in something that we have in great abundance: land and hardworking and engaged youthful people that are actually keen to build their own lives and build the country.
Financing women is one of the best ways to stimulate economies. Women reinvest approximately 70 to 90% of all their income into household welfare, meaning education, health, nutrition, and housing. So this reinvestment has a multiplier effect on local GDP because it enhances productivity, children's learning outcomes, and long-term human capital development. At Agribora, of the 10,000 farmers now connected on structured trade, 45% are women. These women are able to better time sales, access higher prices, reinvest proceeds into school fees, improved farming outputs, and household necessities. This is the economic ripple that contributes to the broader GDP impact. Today, platforms like Agribora trades more than 10,000 tons of cereal annually. But in Kenya alone, the grain sector is a huge opportunity. It represents more than 4.5 million tons every year, with millions of women operating at different points of the value chains. Investing in Agribora is a way to scale this impact. If Agribora's infrastructure scaled to even 10 to 20% of the market, women entrepreneurs would have access to financing, and the sector could contribute to an additional 200 billion Kenya shillings of GDP over the next decades. With Africa's female population expected to reach over 1.6 billion by 2050, the contribution of the women economy will only grow, and the need for structured financial inclusion will become more urgent. This is not about changing just the face of Africa. It is about making sure that we can all advance as a continent and leverage one of the biggest assets we have, our people. If you also want to support structured financial inclusion and innovation in Africa, visit the Melanin Capital Neobank Investor Dashboard, our partners for all of these Melanin Means Business case studies. Together, we can finance today the Africa we want tomorrow.